Welcome back. Pharmaceuticals giant Eli Lilly has received the green light from the FDA, the Food and Drug Administration in the United States, for an Alzheimer's drug. This makes it the second drug to slow progression of that disease that, of course, affects millions of people around the world. We're back again with Neela White. She's Senior Portfolio Manager at Blue Wing Advisory Group with Raymond James. Your thoughts on this development for Eli Lilly and what you think of the stock?
You know what? I think the approval from the FDA, I think it's tremendous. I mean, when we look at Alzheimer's, right now it's killing 7 million people in the US. Globally, 1 person every 3 seconds is diagnosed with Alzheimer's. The current bill is around 1.3 trillion US dollars. And that's expected to double by 2030. And by 2030 itself in Canada, there'll be 21 people diagnosed. So when you look at the impact that a drug like this could have, I think it's just tremendous globally.
And Eli Lilly, of course, has risen over the past year, almost doing a double, largely on the back of the success of one of its weight loss drugs. How significant an addition to the portfolio is this Alzheimer's drug?
You know what? I think it gives them a diversified portfolio. So, one of their first drugs, it's one of the GLP-1, which is treating diabetes and, the new trend of treating weight loss. So that has certainly added to their balance sheet. But when you look at the two ends, diabetes is a killer. Alzheimer's is. So I think they're covering and expanding their portfolio. Super important. And I think, on the diabetic weight loss side, it's so thematic right now that I think it has legs. They've expanded their factories to be able to combat the heavy use of medication. Yeah.
So you would buy Eli Lilly stock at these levels? You
know what? I think I would. When I look at the stock and I look at their pipeline, they have 25 stocks right now in their pipeline, all phase 2 or later. The company itself was founded, I think, in 1876, 150 years old. So that means it's gone through a lot of market cycles. And when we look at just our healthcare system, there's a real medicalization of it. And I think that's going to have legs going forward as we age and stay alive longer. Okay, let's shift to a couple of Canadian retailers. First, Dollarama. You like this stock? I do like Dollarama. I think they have a great global footprint. They're on target to open 2,000 stores by 2031. They own 60% of Dollar City in Latin America. They're poised to open 1,050 by 2031. Dollarama itself has raised their dividend 12 years in a row, and Dollar City has actually initiated their first-time dividend. Dollarama is going to open a store in Mexico in 2026, I believe it is. And they, again, are expanding their shelf line. So, again, whether interest rates go down, inflation goes down, when you're looking for value, I think because it has such an expansive line now, that it's still attractive to people from various income classes. Yeah. So you're unconcerned about a slowing Canadian economy and the effect it might have on Dollarama? You know what? I think when you look at retailers, regardless of the slowing in consumer spending, consumers are going to be driven towards value and where puts the least pressure on their pocketbook. And I still think it's going to be a store like Dollarama. They're still the monopoly for dollar stores in Canada. They've been consistent about their retail experience, which I think provides loyalty. You also like Couche-Tard. This is interesting because this stock has often moved directly from left to right to the upper right. But now, as we look at this, it is significantly off its high. You can see it got to $85, $86 or so, and then has settled back into the mid-70s and has essentially drifted sideways for 3 months. What are your thoughts on Couche-Tard? Yeah, you know what? They certainly have been experiencing some headwinds with the lower consumer spending. People are watching what they're going into the store and actually buying. Like, are you going to still buy a chocolate bar to go with your coffee? Stuff like that. I think, again, we're looking at consistent experience. They do have a bit of a lower gas price, so it attracts people in. I'd read in one of the reports that within an hour, 80% of the people have eaten what they bought. So you see that it's a very responsive sort of consumer. I think they are poised well for mergers and acquisitions. They're global, North America, Europe, and Asia. So I think, longer term, I think it will be a great part of a portfolio.
Okay, why don't we finish with one more you like, Chartwell
Yeah.
REIT. This is in the retirement sector.
Yeah, and again, it's one of those themes of we are in an accelerating aging demographic. I think it's going to cover the gap between aging in place and long-term care, where we know there's a shortage of beds. Their placement year over year is up 18% from 2023. They're looking to have a 95% occupancy rate. So I think it's poised in an area where there's going to be growth, and the growth isn't slowing down into 2030.